Thank you, Mark, and a big hello from London. Okay, so we have a lot to go through this week, as we not only have the weekly patterns for last week to discuss, but also the monthly patterns for January 2026 to talk about. I'll start with the weekly patterns for last week. In the currencies, we had what might seem on the surface, some surprising weekly key reversals up in US dollar, Thai baht, which has seen a follow-on higher this week, if limited, mainly limited by an old unreconstructed 1997 to date. That's right, a last century to date unreconstructed uptrend, today at 31.83, and that is acting as a resistance. In truth, I'm not too surprised by this, as last week saw a low and low close not seen since March 2021, so this is a good reactionary pullback. We also had a weekly key reversal up in US dollar, Hong Kong dollar, which has been on the rise since between Christmas and New Year, and is now midway in its pegged range between 775 and 785. We also had a weekly key reversal up in Paris milling wheat futures last week, and this is more a reactionary move up from congestion below between 186 3/4 to 187 3/4. However, the medium moving average overhead, which is currently at 192 1/4, has been capping prices since late October, and the range between congestion below and the medium moving average above is now very constricted. Something will have to give, and soon. I cover this more fully in my weekly grains and starches video commentary. For weekly key reversals down last week, we had only the one in US dollar, Nigerian naira, 1 month NDF in the currencies. This week we have seen a continuation of the move lower, a move that has been in operation since really September last year. Over to stock markets, I had only the one, a weekly key reversal down last week in the Shinex Composite Index. This has seen attempts to go low with lower closes this week, but it has not managed to really break below last Friday's low at 40.47. Now onto the commodities, and we had weekly key reversals down in both spot, platinum and palladium, but interestingly, despite the big moves, we did not have any such patterns in spot gold or silver, and I believe that to be very telling. Well, this week we have seen a partial follow through lower on Monday, but then a reactionary move back within last week's very large ranges. We also saw a weekly key reversal down last week in LME 3-month nickel and LME 3-month lead. The moves lower in nickel had a great follow on lower on Monday, but we've since pulled back with within last week's range on that, if around last week's Friday's close. In lead, well, we have seen a stronger move lower, and that ties in with the longer term pattern of an annual key reversal down we saw in LME 3-month lead back in 2024. I cover both of these more fully in my weekly metals video commentaries. We also had weekly key reversals down last week in both New York sugar and coffee, but not in the London contracts for these, just in New York. So it was specific to each of these. Well, we saw an attempted follow-on lower last Monday in New York sugar, but we have a pretty good congestion band below between 1375 to 1409, containing the 61.8% absolute Fibonacci line for the 21st century at 1383. And these have forced the market back up within last week's range. In New York coffee, it was a different story, as this week prices have headed lower, not only from a mid-December 25 to late January 26 head and shoulders top pattern, but also through congestion between 309.90 to 312.5, down to the next congestion, which is between 301.55 to 303.40, which so far we have held up. Finally, we had a weekly key reversal down last week in Chicago lean hog futures, which this week has seen a strong reactionary move back up, making new highs not seen since mid-July last year. Over now to the monthly key reversals for January, and there was, unsurprisingly, monthly key reversals up for euro against the US dollar and US dollar against the Japanese yen, though not in any of the other currency pairs that I follow. In the Saudi TDW main stock index, we had a monthly key reversal up in January, which has seen a move higher from January's close, but has so far stalled a little ahead of January's high at 11,500 area. There was nothing in the other equity or fixed income markets I follow, so over to commodities. We had an interesting series of monthly key reversals up in crude oil products, but not in crude oil itself, either over here in the UK or in the US. Thus, there were monthly key reversals up in NYMEX heating and RBOB futures in January, as well as in ICE Gasol futures. We also had a monthly key reversal up in January in, unsurprisingly, Chicago wheat futures. Well, surprisingly, I should actually say, and not in any of the other international grain markets. This has not seen any follow through higher in February so far, and rather a reactionary move back down, also threatening a mid-December 25 to end of January 26 reverse head and shoulders pattern as well. In CME butter, we had a monthly key reversal up in January, though this was more of a reactionary move back up after the market had been falling since last summer. So far, and it is early days, we have dipped a little below last month's close, but still stayed within January's range. We also had a monthly key reversal up last month in the EEX hydrogen index. Quite an impressive move, but as this is a weekly index, I'll have to wait to next week to see if there was any follow through. Over now to shipping. We had a monthly key reversal up in January in both the Baltic Clean and Dirty Tanker indexes. It is early, but the Baltic Clean Tanker Index saw a new high since then, one not seen since June last year, whilst the Dirty Tanker Index also made a new high on Monday, one not seen since late December 2022. However, prices yesterday pulled back a little below January's close. Moving now to the monthly key reversals down seen in January, and there were monthly key reversals down last month, unsurprisingly, in US dollar Danish kroner, coming after the significant weekly key reversal down made just before Christmas. It is early, but we have seen a continuation of the reactionary move back up, seen late last month, though we are still within last month's range. We also have a separate monthly key reversal down in US dollar Romanian lei, more probably related to the move in the euro dollar, which has also seen a small reactionary move back up so far, though it is early yet. Now onto the real meat of the technical patterns for January, and we had monthly key reversals down in Bitcoin, Ripple coin and Solana coin, all of which, and I know it is early on still, but all of which are flirting with moving lower still. Now I guess the key question for me is why Ethereum coin is not included in this group, and that is simply due to the spike higher we saw back there on the 10th of December last year. However, this has not stopped Ethereum from also being under pressure, making a low yesterday not seen since early May last year. Finally, and I know this is an exhaustive list, but here's the final one. We had a monthly key reversal down in January in the ICE EUA carbon futures for December 2026. This is an emission contract. We saw an attempt lower on Monday, making a new low not seen since late October last year, but we've also seen a reversion back up somewhat, though the market keeps toying with that January low right now. As always, I'm happy to answer any direct questions if anyone's interested. And with that, I'll finish this section from London. I hope that you found these comments useful. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.